What's good, fellow millionaires? What is up? Yes, you're all going to be fellow millionaires. Don't even worry about what's up. Welcome back to the channel. Welcome to the channel. What's good? Anyways, I'm Darren. What's up? So, there's a pretty common saying in the stock market, and it is sell in May and go away. Now, if you know about this, cool. But if you don't know about this, let me elaborate a little bit. Basically, in the 1980s, a term got coined, and that was sell in May and go away. It just so happens to rhyme, so that's pretty cool. But the reason this saying got coined was because the returns from May for the next 6 months until about October 31st were not very good. And the returns from November till April were really good, okay? So people start saying that you should only really buy stocks and hold them for this time, and then in May, don't buy, kind of sell your positions because they're going to do bad. Is there any truth to this, or is it just a bunch of BS? Well, I did some digging, and CNBC actually put out this pretty good article a couple days ago, and I think it's pretty cool because it gives you a pretty good example. So let me go over this article, and then I'll talk a little bit more about it. So it says here, sell in May and go away. Maybe not this year. Historically, investing in the Dow between November 1st and April 30th each year and switching into fixed income for the other 6 months has been a winning strategy. This typically outperforms holding the Dow between May 1st and October 31st. Thus far, we have failed to find a similar trading strategy that even comes close over the past 6 decades, said Jeffrey Hirsch, who runs Stock Traders Almanac. It's like the Farmer's Almanac, but for stocks. I like it. It is May. But this year, don't sell and get out just yet. The best 6-month strategy has become legendary on Walmart. Sell in May and go away means investing in the Dow Jones Industrial Average between November 1st and April 30th and switching into fixed income for the other 6 months. This has dramatically outperformed owning the Dow Industrials from May 1st to October 31st. While the outperformance has not been as strong recently, the Dow has been up between May and November in 5 of the last 6 years. The overall strategy remains one of the greatest mechanical trading models ever devised. An investor putting $10,000 into the S&P 500 between May 1st and October 31st, 1950 to the present would have $4,138, an astonishing loss of $5,862. That's crazy, absolutely crazy, to put $10,000 into the stock market in May of 1950. And today, 69 years later, that's funny, it's going to be down. I don't know about you, but that's absolutely crazy. Like, everything I've known about stock market investing is hold for the long term. 69 years, like how much more long term do you need? An investor putting $10,000 into the S&P 500 from November 1st to April 20th over the same time period would have a gain of $2,836,350. So you would have $2.8 million versus a loss of $5,800. Slight difference. That is not a typo. We are talking about a gain of $2,836,350 versus a loss of $5,862. These results were obtained by adding MACD triggers, certain buy and sell signals, developed by the Stock Traders Almanac. Even with these MACD triggers, the results are amazing. Simply owning the Dow with an initial $10,000 investment from May 1st to October 31st since 1950 would have produced a gain of just a little more than $1,000, while simply owning the Dow with an initial $10,000 investment from November 1st to April 30th since 1950 would have produced gains north of $1 million. Thus far, we have failed to find a similar trading strategy that even comes close over the past 6 decades, said Jeffrey, who runs Stock Traders Almanac. His father, Yale Hirsch, discovered the best 6 months strategy back in 1986. What could possibly account for this outperformance? First, there are still clear seasonal trends in the market trading, particularly around the summer. It falls during a time when traders and investors prefer the golf course, beach, or pool to the trading floor or computer screen, Hirsch said. Trading volume can decline throughout the summer, and then in September there's back to school, back to work, and end of third quarter portfolio window dressing that has caused stocks to sell off in September, making it the worst month of the year on average. October is also traditionally a poor month for stocks, while Hirsch particularly attributes to the October 31st mutual fund deadline. The Tax Reform Act of 1986 mandated that October 31st was the cutoff date for mutual funds to realize capital gains and losses. Once the fourth quarter comes around, Hirsch says end-of-the-year strategies drive stocks. Institutions' efforts in the fourth quarter to beef up their numbers can help drive the market higher, as does holiday shopping and an influx of year-end bonus money, he said. This is followed by the new year, which can tend to bring a positive new leaf mentality to forecasts and predictions and the anticipation of strong fourth and first quarter earnings, and drives the market higher into the second quarter. As he has many times in the past, Hirsch emphasizes that sell in May does not necessarily mean May will be down, or that the next 6-month period will be down. We are not the sell in May people, we are the reposition in May people, he said. The point is that most of the market's gains occurred November through April, and that the market tends to drift sideways and is more prone to sell-offs and bears May to October. Hirsch, in fact, is fairly bullish about the short-term prospects for the market. The market will most likely drift higher on the bullish GDP earnings backdrop and the dovish Fed. Hirsch said, plus it's the pre-election year, and that is the best of the 4-year cycle, up 15.8% for Dow Jones Industrial Average and 28.8%. Wow. So all in all, there's actually quite a bit of facts right there. And I did some more digging. Yes, it's pretty much actually true that selling in May and say repositioning your money or reallocating it or whatever you want to do is actually a good move. Pretty interesting. But, however, I will say though that article was pretty stark on the difference. That's kind of a lot. You would go from making 2.8 million to losing 5,800. Now, again, who's gonna just say invest from May to October? Probably not too many people. But if you're going to invest, as always, invest for the long term and invest, all year round. Don't just invest for 1 month or a few months. And if you are gonna only invest for 6 months, then maybe invest from November till the end of April, and maybe not May to October. However, they said this year may be different. Again, I feel like that's what people say every single year. Every single year may be different. So who really knows, right? This is something you really cannot tell. It's anybody's guess if the market's going to be up or down. It looks like the market's going to be up this year. It's doing pretty well. I should mention that the first 2 trading days of May were down. Anyway, so if you want some backstory on this whole sell in May, go away thing, at the end of the day, there is some cold hard factual proofs that say selling in May and going away is actually a good strategy, or say reallocating your money and putting it into something else, like they were saying fixed income. So if you do something like that, maybe it's not such a bad idea. However, in my personal take, this year, because every single year is different, but in my opinion, this year looks like a pretty good year. It looks like we're going to continue to climb higher, and I think we're going to reach a new height fairly soon. And I think the stock market will continue to push higher and higher. I'm personally bullish on stocks. I've been bullish. I don't think the recession is going to come anytime soon. And the reason I say this is because there's no real indicators yet. The only real issue the economy is having is China, the trade war kind of stuff, but it's starting to level off where it's not such a big issue. And this is, again, the third year, the pre-election year, which is always the best year for stocks, always, always, always. I did another video saying, will we have a recession in 2019? I'll link it over here. And in that video, I talked about the pre-election years and how they're always pretty much really, really good. So, this is a pre-election year and it looks like we're doing pretty well, and I think we will continue to do well. So I don't think we have too much to worry about this year. I personally think we're going to make new highs and we will not sell off in May to October. So I don't think you have to sell in May and go away this year. Maybe I'll do it again next year and maybe it'll be different next year. Who knows? Anyways, that's pretty much it for this video. Hope you enjoyed it. If you did enjoy it, always remember to hit that like button, hit the subscribe button, and turn on that bell notification to always stay notified on all the latest, greatest videos that I post. Anyways, until next time, have an amazing, beautiful, life-changing, one-of-a-kind day, and I'll see you next time.